Masood Awir, you're the Chief Executive Officer for Tasweek Real Estate Development and Marketing. You've been speaking on a panel talking about mortgage market development in Abu Dhabi. Do you believe it's a catalyst for growth?
Definitely, we always say one part of a real estate sector development and booming always is the financing, which comes in forms of mortgage in the market. I'm sure now the real estate developed and completed is coming to the market hugely more probably in Abu Dhabi for this year. So therefore I think the growth of the mortgage market becomes very much essential, and it is further will get developed because you're talking about the whole mortgaging market, which has connected with legislation and the regulatory body that has to come, because every mortgage market is connected to the property legislative and formation of a property rules and regulations in terms of title deed, insurance, and all those factors.
So how vital is it that regulatory frameworks are developed for the issuance of mortgages?
It's very, very important. I think it will start one step ahead before the mortgage legislative part will be the real estate framework that needs to be put in place, and legislative in terms of title deed, insurance. These factors are so important because if we look at it from a mortgaging point of view, mortgage always is a financial instrument. The financial instrument always have to be regulated enough to protect and sustain the growth of the mortgage and the real estate, because one cannot go without the other. The real estate growth depends always on the mortgage, and the same thing, the mortgage requires a regulated real estate sector in order to be facilitating the financing and the financial transaction to happen.
And what do you think can enhance the mortgage market?
What will enhance the mortgage market today, we know after the recession we have a lot of what I call the negative equity. The negative equity means the property which went in terms of reducing the value of the properties which are available in the market, or the one which were being purchased. So that's why that's one factor. The second factor is the cost of funds that these mortgage companies provide and the interest rate that it is provided to the market. So there must be a cheaper lending rate available to the banks and to the mortgage companies in order for them to facilitate to come to the end user at a lower rate. That requirement dictates that we need sooner or later to have a secondary mortgage market within the UAE to facilitate a cheaper rates and facilitate a different mortgage terms. When we looked at it, we traveled to the Far East, and specifically when we went to Malaysia, we met a couple of the companies who are doing that, and we saw that the government played an important role in forming the secondary market regulatory body that controls the mortgage lending as well. So in order for us to be more and improve our mortgaging market, we need the secondary market to be created. This mortgage will avail more sufficient funds for the mortgaging company and for the banks to lend at a lower rate, and that will enhance the people to obtain further more mortgages, which will enhance the property sale and transaction in the market.
And what lessons do you think have been learned from the past experience?
I think the lesson we learned from the past experience is that we need to be more accurate on our data that we obtain when we go towards mortgages. We need to create something what we call the credit referencing between the banks, not to allow people to obtain different mortgages from different companies at a single time, because that increases the risk on all the industry, the mortgage industry as well as the real estate industry, by having a lot of mortgages which can lead to default. Now the mortgaging company and the banks are taking more rigorous steps towards identifying the individual and the property in terms of valuation of the property, in terms of the contract which has been signed to have it as a collateral against every property that they assign mortgages for, and being more realistic in terms of what to offer against the property rather than offering 90% financing per property. So they've reduced the loan-to-value ratio, which have reflects the reality of a real estate investment portfolio.